very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise.
Let me ask you something, man.
Don't stop. I'm not finished yet.
Do you ever ask yourself,
Don't stop. I'm not
when are
finished
they ever
yet.
gonna stop? Do you ever ask yourself, when those bad boys are gonna stop?
Man, for those guys who listened to me and is on Marathon Money Plus, you guys just made a whopping 60% on Douglas Elliman right here, baby. Let's get it. That's when the money train is going. When are you gonna stop all these guys making all that money? Yes. Man, you heard his voice. He's back again. He's back again.
What's up,
for you
everybody?
guys. Yeah, this is Derek. Man, Derek Miller of Prometheus Investing. Man, this guy's amazing. I love him on the show. For you guys don't know, man, he has a discount code, Black Friday 50 discount code. He's a financial. He used to be a financial advisor for over 15 years, more than a decade. But what he's doing for people out there, definitely for people that are beginner, he's teaching you the fundamentals. He's teaching you how to take advantage of the market. He's teaching you how to money allocation. He's teaching you about investing allocation. It's so many things on his website that I think personally everybody needs just to get the foundation down to learn how money works and how you can grow it. I felt like I just sold your business, man.
I love it. I love it. You did no, you did it right. Look, it goes from beginner to expert. Like I don't care what level you're at, it doesn't matter, right? But what I find most, Kenny, is like most people out there, especially young people, they all like the flashy, sexy stuff. That's trading. What do I trade? What do I buy? What do I sell? No idea how to scale in, how to scale out, how to control risk, how to control cash, when to know when an asset class really you're like one of the biggest things we just talked about this like on your Money Plus cast is like you have to be able to identify within yourself when you're experiencing FOMO. When you start getting greedy, when you're watching how much it's gone up each day, you have to know yourself, right? So a big thing that I do is not just look, even guys that have been doing this for a long time, when you sit down and you set up their financial plan, they go and you go, look, man, if you just did 21% a year, this is where you'd be in a decade. They go, holy shit. Well, what am I doing? Like, why am I driving myself crazy? I'm like, I don't know. Because the average guy, Kenny, you know this, the average dude can't day trade. He's not, it's going to drive him nuts. You'll go
99% of traders don't even
make money.
They're not really day traders. They don't even make money. So like the real
job
money is going to be
covers their
in long.
losses.
Yeah, facts. Their job covers their losses. 100% true. But the real money is coming in long term, holding stocks, man,
Right.
having bonds, treasury bills, all that stuff. Is a long term game, and we know this. Everybody know this. Warren Buffett knows it very well. It's no different
money
from
moves.
It's no different from having a business. You start a business, and we all know this. Is really the real money starts being made until 10 years in, 11 years in, 12 years in. Then after that, it's a snowball effect. It's a complete snowball effect, and that's for anything. Even if you in a lot of trading, you get a lot of windfalls, and those are false confidence. Yes, you made a lot of money, but those are really false confidence. And same thing happens in business. You know what I mean? You'll get a year and then you're making a ton of money, and then the next 10 years you don't know because you don't have the foundation. You don't know how to keep it going. And but man, I think your course is perfect. I think the foundation. We talked about the Federal Reserve and the Marathon Money Plus. But man, just
well, that's important stuff right now. I mean,
So go check that out. We talked about a ton of stocks, ton of things that we're selling, but I really want to pick up the conversation about, the market is at all-time highs now. The Dow's at all-time high. The S&P is at all-time high. The NASDAQ is at all-time high. Bitcoin is at all-time high. What would you sell
right now? Without a doubt. I would already be scaling out of these positions. But I can tell you this: I wouldn't be scaling out of fear or out of any concrete evidence that the market has any reason to stop right now, other than I know how far it's run. I know the season that we're heading into, so I would believe that it is heading in a direction for a correction. But I will give you the one way you can know when you should sell. Like if you're one of those people that's like, I want to hang in there until the very end. I'm not one of them. But if you are that kind of person, I'll tell you in just a minute how you'll know for sure when to sell. But let me say this: I wouldn't be selling to buy nothing. Right now, I see the money firing into bonds. Massive. It's like if somebody turned on some sort of like a wind tunnel and flushed as much cash as they could, and they're just blowing it into bonds. That's what's happening right now. And there is only one group of people that can do that. That's institutions. That is institutional money flooding into bonds. No matter what they're saying, no matter what reports you're reading, you can't hide where your money goes. And their money is going there. And I'll tell you this: when their money goes there, that's where my money goes. This isn't David versus Goliath. I'm not trying to take on Goliath. I just want to know which way he's walking. And so right now, because of what I see, and if you pull up the symbol TLT, you'll see it too. Because I see them putting their money there, I would be pulling out of stocks and putting money into those bond markets. Corporates are exploding. The only bond market that's not exploding, that like with cash, is junk bonds. And that's because junk bonds are closely related to what? Stocks. So what does that tell you about their belief in stocks? If they're buying corporate bonds, LQD, if you want to look it up, they're buying corporate bonds by the truckload. If they're buying treasuries, TLT, that's your 20-year treasury. AGG, that's an aggregate bond index. Look them up. If they're pumping money into all of that, and they're not pumping money into junk bonds, which is the one bond class closely related to stocks, where might you put some money? They're not putting all their money over there, because if they were, the stock market wouldn't be hitting new highs. But they do what the average investor doesn't do. They scale in and out of positions. Now, they have a very big reason for having to do that. They're managing billions and billions of dollars. It's hard to move all that money, but that doesn't matter. What matters is that they're doing it, and they're showing you which way you should be looking. So that's the reason I would be doing it, Kenny. I would be scaling out for that reason alone. But if you want a concrete way to know, this is probably the beginning of something big, just pull up a chart of DIA, that's the Dow Jones, SPY, which is the S&P, QQQ, which is the NASDAQ. When you see a giant weekly bar in volume, just like you did in December of 2021, you go back to December of 2021, don't look at the chart as a whole, or else it won't look like a lot of volume right now. Back it up to pre-December 2021, pull up a weekly chart, you'll have giant bars of volume that started on all three indexes in the exact same week. It's because that is when the selling began. It turned up. The NASDAQ fell 35% from there. The S&P fell somewhere between 25 and 30. And then the Dow fell a little over 20% following that. And that's your major indicator of when they're going to let it rip. Institutional money will let the market rip to the downside once they have sold theirs. And they can't hide their selling. You can hide yours. They can't. It's easy to hide $100. It's not easy to hide $1 billion.
No, it's not. It's not easy to hide $1 billion, man. It's definitely not. But, man, you're right. Please, guys, take a look at the market. Junk bonds are closely related to stocks. They're not putting their monies there. You should already take a look. Do your research. We're telling you, even we're telling you, go out there and do your research. Listen to us. TLT, corporate bonds. Pay attention to that. Just take a look and you will see it. And everything will be there for you. You just got to, man, it's like if you've seen Rush Hour, follow the money.
Follow the money. Always follow the money. And you know, it's funny, Kenny, we all talk about earnings, and we talk about, this like sector, this industry, this, that. Look, I'll tell you right now that if we took, I don't know what a piece of crap shoe is, but if we took like Pumas, you and I, and we had $1 billion, and we put it out on Facebook Marketplace today, and we put out on Craigslist, and we put out on Amazon, we're buyers of Puma. We want every pair of Pumas that exist in the United States, and we'll pay $2,000 a pair for the first 10,000 people to show up. Then we'll pay $10,000 a pair for the next 10,000, and then we'll pay $50,000 for the next 10,000. Pumas tomorrow are gonna be worth $100,000 tomorrow because we have set a bid. We have let the world know that we're gonna bid it. Every 10,000 people, we're going from 2 to 10 to 50 to 100. That means the bid right now is 100. And that also means we're going to own a bunch of shitty shoes. But point is, you don't need to worry what the product is, because if people start pumping money at it, that's what it's worth.
100%. 100%. People determine the value. You know what I mean? People determine the value. Where people are buying is what the value increased. You know, NVIDIA is a prime example of that. NVIDIA is a prime example of how something can run up because people determine that's where the value is. And people kept buying the stock, and they kept buying it, and you saw it go eclipse 1,500, 1,700. And that's how you get that. And same thing with Tesla. Same thing with
Tesla's
Google.
even
Same
a better
thing with
example.
Apple.
You can look at the drop. Like NVIDIA hasn't really dropped yet, but Tesla's a great example.
Tesla is a phenomenal example. Right now, Tesla's at 354, man. It is 2 weeks away from, it's 2 weeks from, you know what I mean, where the elections happened 2 weeks ago and Tesla's still going up. It's at 354. We're talking about 2 weeks ago, it's at 251. It's $100 move up.
Almost 50% in 2 weeks.
Yeah, it's crazy. It's crazy. It's a crazy move.
Just think about it. It's like, so what fundamentally happened to Tesla in the last 2 weeks? Nothing. It's just Donald Trump won the White House, like to some degree, you know. But the reality of the situation is the same as it was in 2021. Tesla was never worth what it was at the highs of 2021, so it fell 70%. This is where fundamentals do matter, Kenny. I know you agree with fundamentals. So do I. Long-term, fundamentals are what drives markets. All this hype we're talking about right now, if you're smart and if you're careful, probably most importantly, if you're careful, you can make some good money in these times. But in the end, Tesla isn't worth 50% more than it was 2 weeks ago. So guess where it will end up?
Back where it came from.
Right back. So it's, and like what you know, we were talking about on Money Plus is like, look, take advantage of moves. Don't be naive, though. Don't actually believe that NVIDIA is worth what they say it's worth right now. They have a technology that doesn't work.
No, it doesn't. A lot of people don't know that. Man, I want to say NASDAQ just clipped 19,000 while we're on the show right now. Just to tell you how high things are going, how things are going right now. And you know, this is unseen. I always believe I have more faith in betting on the NASDAQ because NASDAQ is just pure technology and the world is heading there.
Right.
But here's the thing. Nothing really has changed in the last 2-3 weeks for all this to happen. Keep that in mind. That's why I started this show with, is it time to sell? You might not sell everything, but start scaling out. Start taking out profit.
And let's add to that. Like, I agree. Look, I'm in the same. I completely agree with you. Now is the time to do it. And I'll say something else. The best investors in the world, you brought up Warren Buffett, and there's a lot of other guys. You know, everybody's under this preconceived notion that what these guys do is they buy kind of along the way, because you'll see some of the purchases. That's not how Berkshire Hathaway works. Right now, Warren Buffett isn't a buyer of anything. Do you know why? Because we always have major bear markets. Whether this generation right now that's in here, they are in for the rudest awakening of all, because they don't know what losing 50 and 65% feels like. They have no idea what it's like when a market falls 50 and 65%. Some of your favorite stocks will fall 90. It's the craziest thing. If you've never lived through it, you got to live through it. You age 20 years when that happens. It's crazy. But for guys who are smart, Warren Buffett's holding more cash now than he's ever held in history. I forget 50 Cent's fund out of London. They have, I think, 65% cash. I think Right now, they only
Yeah.
have 35% of their money invested. And
Follow the
he
money.
literally is following what Warren Buffett does. That's like that's really how 50 invests. And he's in 65% cash right now because you don't buy things when you have to question, hey, is this too expensive? Is this, I can't tell. Is this high? God, where is that? Now, if you're trading every day, that's different. But if you're not, or if you want to make the biggest gains of your life, just wait for everything to collapse. There'll be fire sales like you've never fathomed the fire sale that goes on. And that's how Warren Buffett really became the man he is now. He just waits for blood to run in the streets. He buys it all. I think on our last podcast, my last podcast with you, Kenny, I talked about how he had to lend Goldman Sachs money in 2008. That's what he waits for.
Yeah.
He sits on cash, and when everybody else is scrambling, he goes, I got it.
Yep.
And
That's
he
all.
buys
That's
it for
all.
nothing.
This is the time where you're starting to see profits galore. Everybody's eyes, everybody's spending money. This is where you start hoarding it.
Yep. Agreed.
I'm going
Agreed.
to tell you right now, from this point on all the way until end of quarter number 2, this is where you start hoarding cash. You start selling everything. You make a profit, 15, 20, 30%, let it go. 10%,
Out.
let it go. Out.
Yeah.
Start collecting as much money as you can. You need
agree.
You need to get that fundamentally down. You need to learn how to basically asset allocation. It's like once you get to the point where you're like, okay, you're up 20, 30%, start scaling some of that money back into cash. You need to have a stockpile of cash to be able to take advantage of down moments.
If you are trading for yourself and your own money, right? And I'm not talking about if you have $100,000 or $1 million or 50 grand. Some guys out there are trading with $10,000. You should never, ever, ever be exceeding more, like having less than 50% cash, except for in very, very small like there are very certain circumstances where that's not true. And that is after you see 30+% drops. So markets, you should always be in 50% cash. If it's your own money, unless you're doing like an asset allocation model with 50 and then the other 50 you're trading, that's also fine, right? But you're aware that I may need to liquidate this to buy a ton of that. So regardless, right now, in a time like this, where I can't tell you how far the market goes up and when it reverses, what I can tell you is this. The market will reverse 40% from where we sit right now, most likely more. That's the reality. Most likely it's going to be more because we haven't had a significant drop. Even that 21, it was like December of 21 into October of 22. That was a drop, but it wasn't that mean. That was a nicer correction. It wasn't that brutal. It was.
You think that's a foreshadowing?
What's that?
You think that's a foreshadowing?
Probably. I mean, I personally think, and I was talking about this with you on Money Plus as well. I personally think derivatives markets are driving stock markets now. And if that is the case, if that turns out to be right, derivatives move at 1,000. It's a bullet train compared to a Titan. I mean, so if that is true,
when you win, you win in speed. When you lose in speed.
Oh, and if it is in fact derivatives markets creating all this, and I believe it is, then the move down will be so brutal and nasty and annihilating that some people that and this happens to every generation, even though once you learn your lesson, believe me, you don't come back. This happens every generation. People learn their lesson. If that's the world we live in now, if that is the case, it is going to be the meanest, nastiest move, and you're never going to get a chance. That's what I truly believe. I believe that is the way that it's going to happen. And I think that'll shake a lot of the kind of FOMO stuff we deal with now, even stuff that's going on over in Bitcoin. I think once you experience that, the first time someone sticks a dagger in you, it's the worst, it's the roughest, right? And if that happens and you're completely unprepared and you're 100% invested, you have no idea what it's like to lose 80% of your money. I do. I've lost 100% of my money 3 times over. That's how I learned how to do this. That's how I learned how to do it. I know what it looks like to be like, I'm up 900%. And then no shit. in a matter of a couple of months, it's all gone. And you just look back and you go, where did all that money go? And it's gone. Poof.
The thing about it was like, man, I really wanted to spend some of it.
Yeah. Well, then you
Market
start
took it
playing
all
out
back.
what I could have bought, what I could have done, the vacations I could have took, the down payment on the house I could have had. And that's the real pain, because to be good in this game,
I just want to tell everybody just how ridiculous the market is, man.
Woo.
SoFi Technologies. SoFi Technologies was $6 a few months ago. It's $15.
I mean,
just a big, like, Rocket Lab, AT&T was under $18. It's $23. Like, Peloton somehow is still here. Like,
I don't even know how that company exists. That's great. I love that they're still here. But it's funny as hell.
Peloton is still here. It's like, come on. It's like, guys, it's time to sell.
But also a caveat to all of this. A caveat to all of this is, listen, I'm not saying, and I don't think Kenny's saying either, that it's over. I told you how to identify when it's over. And I promise you, when that happens, it's over. When you see volume spike at like 300 to 500% in a given week, and that is how it's identified. I've been doing this 25 years. I did it in 2018. I did it in 2021. I did it in 2007. I did it in 2008. It is not difficult to spot major bear market moves. That is how it will start. It will start with an increase in overall volume within an index between 300 and 500%. Boom, it's on. Here we go. And you'll know, hey, I can sell it all. But what Kenny's telling you is, if you're scaling out of positions and scaling into new positions that are perhaps undervalued, we're like, I mean, how the hell can you say SoFi is justified going from 6 to 15? It's impossible. It's impossible. So either you believe the gamblers have taken over and they're going to own these markets, and that's never going to happen, or you know what's happening now. All the FOMO going on out there, all your excitement about all your gains, it's completely intentional. Because if you're buying, they're selling. That's a fact.
Yep. 100. What do you? One last thing before we get off, man. What do you think about Carvana?
Carvana, I haven't looked at it.
It came down for the bottom of the epipsis, bottom of the black hole at a $10 and rose up to $255.
I have not looked at it. Is there any way? Hold on 1 second. I just haven't looked at it. All right. I just wanted to quickly take a look because I remember that massive spike up. Honestly, I don't play in stuff like that because you could tell there was a massive pump back there. And so it's not like, I mean, if you want a real opinion, hold on, give me 30 seconds. I will look and like have an actual opinion.
I like here. I pulled it up for you.
Let's see. So, like, if I'm looking at this, I'm already saying to myself, I'm already saying that this isn't that ugly, really. This really isn't that ugly. Just pulled on. And what are we looking at here? A daily chart?
Yeah, we're looking at the daily chart. We'll move it to the weekly.
Let me see a week. That's let me see. Do you put volume on this?
Put volume on this. Gotcha. What do you think?
Well, I mean, you can obviously see how I was talking about volume with you. You can obviously see where all the buying is stepping in. So all your buying is down here just above 50. So you're rallying. You've rallied into what, 100. Your volume is definitely higher than it's been. But do you see this big bar back here on earnings? And then you see another one. One's in June of 23. There's another one. I don't know what that is, like April or something of 24, March of 24. So you should see this exact same scenario play out, but at a higher price for this thing to roll over, unless volume completely dissipates back to where it was like, so mid-June, it kind of picked up. If you see volume that looks so low, it's like pre-2023, pre-June 2023, it's over. That thing's going to tank. Or if you see any massive volume like you did early 2024 or June of 23, that means that institutions are selling it. So right now, it's just cruising, man. That to me, I go, that's like, par for course. It's game as usual right now. It's just running up.
Running up, man. Hey, we're coming to the end of this. I appreciate Derek coming out. Man, check out his website, Black Friday 50 discount. Man, this is Marathon Money. I appreciate you guys. And peace.
Peace. Thanks for having me, Kenny.